Look, the path to 10x, it's a long way to the top if you want to rock and roll, as was the lyrics from that famous song, right? So we'll be talking about the path to 10x in the next couple of videos. Look, it's not linear. Everybody thinks it's one way straight up. It's not. There's highs and lows, and here's what happens. Then they enter the discovery phase. That's when you first have the first couple of investors learning about these stocks. Stock probably doubles. What happens after that? You have the naysayers come out of the woodwork. And then you have the early milestone phase. That's when the company actually succeeds, has some positive upside surprises. That's also called the honeymoon phase, where the stock is moving up. Some investors are happy. And a lot of people think, okay, that's it. The stock is up 500%. How much further can it go, right? So again, the honeymoon phase is where the stock is already up 300 or 500%, and a lot of the naysayers start saying, well, how much further can this thing go? But there still becomes a level of investor interest. Okay, now stage 4 is the most exciting. This is called either the breakout or the setback stage. And what happens here is, look, the stock is already up, let's call it 500%, and there's enough doubters out there that are saying, hey, is this it? Is this it? But then there's other people saying, hey, this could be a 100-bagger, right? So two things happen at this stage. Either the company has a setback in terms of they don't deliver on earnings or whatever it is, as was expected, or the product is delayed, and and any type of delay like that, when a stock is kind of priced to perfection almost, that could really send the thing tumbling down, 50% or more in many cases. So at that point, one of two things will happen. Either you're going to have the bargain hunters step in. So if the bargain hunters step in, the stock then starts making a climb back to the top, or stays down. Okay, but here comes the better scenario. Scenario number 2, which is the better case scenario, is the company surprises to the upside. So look, there's a lot of eyeballs on the stock right at that point. The stock is up 500%. That means there's a lot of eyeballs on it. So any type of positive surprise at this point, something that the market was not expecting, is going to send the thing parabolic. Okay, so it's up so the stock went from $1 to $5. This is the level where any type of upside surprise is gonna, investors are gonna extrapolate it. So if the earnings came out better, or the product launch came out better, whatever it is, any type of positive thing, investors are gonna extrapolate that, and the stock is gonna go to that next level, which is $10. I mean, it's gonna go parabolic at this point. So you went from $1 to $5, climbing that ladder, and now it's $5. And here comes the blowout stage. It goes to $10, and that usually that last phase happens very quickly within, sometimes a week, literally 4 or 5 days. So here's the thing. Whenever you see these stocks that are already up, 500%, they're up, 800%, even at 1,000%. So let's say stock goes from $1 to $5, now it's $10. It's going to be at that level. You're going to see on message boards and investor forums, everybody saying, "Oh, it's going to go to the moon. This is going to be life changing." They only see the absolute bull case. And look, so here's what happens at these points in time. One of two things can happen. If you have a smart CEO running the show, he's going to use that high stock price to make acquisitions. He's going to take advantage of that to make some key acquisitions, and that is going to support the stock. That's going to keep the thing on a sustainable path. So look, if your market cap went from 10 million to 100 million, now he could do an acquisition of a $50 million business or a $60 million business with minimal dilution, basically, right? It's even better. What happens if the market cap went from 10 million to 200 million? It gets even better, right? The other thing that smart CEOs do at this point is they will raise capital at these levels. They're going to raise capital at the high prices at, once the stock is up 500, 800%. The stupid guys are not going to raise capital, and they're just going to let the opportunity go to waste. We've seen that happen, right? Stock ran from a nickel to 250, then came down, and the CEO raised money at 20 cents. I mean, look, some people make mistakes. What can you do? Hopefully they learn from them. But look, the smart guys take advantage of these opportunities to raise capital or make some strategic acquisitions, and that is the sign when you see a CEO doing that. That's a sign of a smart operator. Ready to build your wealth with penny stocks? Then get my new book, 10 Bagger Blueprint. It gives you a proven system for finding stocks which have potential to increase 10x and even 100x. It's the proven system that I've used over the last 25 years to help create over $1 trillion in shareholder wealth by introducing investors just like you to countless stocks that have increased 10x, 20x, 50x, and even 100x. Get the book, 10 Bagger Blueprint. It's on Amazon, only $15. It's going to change your life.